Welcome back to Morning Markets on Friday, the 21st of April. In the last 24 hours, we've received some important data points in terms of the health of the consumer. Globally, with American Express reporting earnings, and here in the UK with retail sales. Please do tune in to find out more. At this point in time, we are in the midst of the Q1 earnings reporting season in the US, and analysts are watching very carefully for signals of order books. They're looking for inventory build-up, they're looking for pricing plans, labour demands, capital investment, a whole array of things to assess the health of businesses as they move forward. Yesterday, we received an important update from one of the titans of the payment card industry, American Express. The data demonstrated that there is a pickup in revenues. They were up 17% through the quarter at 14.3 billion and 22% from 1 year previous. So they're seeing real strong spending still coming through there, and that was higher than what the market was actually expecting. And this was supported largely by spending overseas, for which American Express charge a higher fee for overseas transactions. Generation Z consumers continue to be the strongest area of growth for the business. Their spending was up 28% if we look from 1 year previous. However, the firm are preparing for an environment of slowing economic growth and therefore potentially a mild pickup in terms of defaults from consumers on their lending, and therefore they were required to build up their reserves. They built up an additional $320 million of reserves through the quarter. And the Chief Financial Officer came out to explain that this was normal practice, and it was really in the spirit of a change in accounting practices which came through in 2020 to ensure that firms are well capitalised if they do anticipate defaults picking up. The increase in reserves and a general increase in operating expenses across the business meant that profits were down 13% on the quarter and shares were down around 2% through the day. For a sense of consumer health in the UK, we also received just there this morning UK retail sales, which demonstrated a 0.9% fall through the month of March, which was greater than what the market was expecting. The market was only expecting a fall of around 0.5%. The bigger drops were seen in areas like retail stores and department stores, where we saw retail store sales fall 3%, and we saw clothing sales 1.7% down through the course of the month. But if we take the quarter as a whole, then actually retail sales were up around 0.6%. The slowing demand points to slowing economic growth, but it's also an encouraging reading for the Bank of England, who are working hard at this point to try and cool demand in order to tackle the inflation challenge. UK inflation is the topic of this week's Do More With Your Money show, so please do tune in as that's released today to find out more. Thank you for watching.